penetration. Anand Roy, the Managing Director of Star Health, now joining us right here on ET Now to talk about the fine print and the road ahead. Good morning. So I was going through the numbers, and what I see is that your claim ratio, pre-COVID, 65%. But ex-COVID claim ratio is still around 65%. It's about 67%. Is this going to be, is this the trend? Is this how it's going to stay for some time? And why is that the case?
Good morning, and thanks for having me. So yes, the claims ratio has kind of returned back to the pre-COVID levels, slightly elevated as compared to the pre-COVID levels because there is still a little bit of lag factor on the COVID cases. They have not totally died down. So we do have some impact of COVID even as we speak. But having said that, we are very confident and COVID is well behind us. And we believe that going forward, the claims ratios will improve every quarter.
Now, claims are, of course, also related to inflation in the sense medical inflation, right? Are you expecting this to impact your guidance at all?
So medical inflation has been factored in our guidance. We stick to our guidance of a combined ratio of around 93 to 95%, which we have been giving since the beginning of this year. And the fact that, we are seeing the loss ratios come down, and we believe that with the kind of arrangements that we have with our network of hospitals, we have about 14,000 hospitals in our network. Many of them are on our agreed package rates. So if we are able to, continue our relationship with them, divert traffic to our preferred hospitals, we believe that the loss ratios will be kept under control as we have guided. But the medical inflation is a challenge, especially after COVID, and we are talking to our hospital partners to bring that under control as much as possible.
Okay. Anand, the other thing I wanted to talk about is switching to growth now. While your retail portion has grown about 22%, with the guidance that you set out of about 20 to 25% a band, wholesale has actually slowed for you this quarter. The component in your GWP has nearly halved for the first half. Tell us what's happening and what is it that we can expect going forward?
So this year, that has been our strategy. We are exiting a lot of wholesale businesses which are not profitable to us. Being a standalone health insurance company, health insurance is the only business that we do. And if that business is not profitable in the corporate segment, we are quite choosy about what we underwrite. So that will continue. That strategy will continue. But our focus is on the B2C retail segment where we are doing exceptionally well. As you rightly said, we have done 22% growth rate, which is 50% higher than the industry. And you have to understand that this is a large company. We have a 33% market share in the retail health insurance space. And with that kind of base, we have actually improved our market share by 2 percentage points in this quarter. So I think, we are well focused on the retail side, which we believe has a longer customer value, has more, strategy in terms of increasing the insurance penetration. And we are able to innovate and bring innovative products and services in that segment more quickly. So that will remain our focus area.
I also want to talk about competition because, players have access to wider distribution channels, which fintechs have been enabling. Tell us about what's happening with competition. I mean, how real is it on ground? And also with the possibility of life insurance companies being allowed to do non-life products, how is it that you see this space evolving and how do you think you'll be able to adapt?
Sure. Competition is extremely intense and there's no two ways about it. There are 30 insurance companies in the general and SAHI space who are already operating in the health insurance business. So the competition has always been intense. It continues to be so. But Star Health has kind of created a brand for itself. We have a very, very strong and granular distribution across the country. We have 580,000 agents working for us. We have a lot of leading banker partners, all fintech partners who distribute our products. So we are not so much concerned about competition while we do keep abreast of whatever they are doing. But we are very confident about our strategies and our, the measures that we are taking to increase our market share and profitability. So I think, we will stay focused on the retail segment. But as you rightly said, alternate distribution channels like fintechs and bank assurance is an area of interest to us. Our those channels are growing very quickly for us. Bank assurance piece is growing by more than 50%. So is the digital side of the business. So I think that will continue, and we hope that we will be able to maintain this leadership.
Okay, so let's see how you will withstand the competition. There have been news reports also that's come in that Reliance Industries, after the demerger of the financial services business, will be applying to the IRDAI for health and life insurance with a capitalization of 1,000 crore rupees each for the two segments. The other disruptor, can this be a disruptor? So you tell us. The Bima Sugam, a one-stop platform as being envisaged by the insurance regulator for everything to do with insurance, where we will all have demat-like accounts when it comes to our insurance policies. The IRDAI is convinced that this is a game changer. You tell us, is it?
It is definitely a game changer in the sense that in terms of the way the customers will be able to service and access all their insurance policy. It is a fact, even I'm sure it is for, as we speak, for you and for me, we have various insurance policies and we do not know how to access them at a click of a button. And if all of that is available in one single platform and we can, manage them, that will be very, very great experience for the customers. And I'm sure that will be very, very positive for the industry in general. So I see definitely this is a positive move. As far as business is concerned, all insurance companies are going to be listed. Customers will have a choice to compare various insurance companies, their policies and their benefits. And I think it's always anything which is done for the benefit of the end consumer. I always think that it is going to be a positive for the industry and for players like us.
Anand, great to have you on the show. Thank you so much for highlighting what business has been like in the previous quarter and, of course, how things are looking up going forward.
Thanks for having me.